Awesome. I know the Austin team is doing like 1,000 dial day, like a lot of people are doing 1,000 dial day. So it's going to be pretty fun. Happy Thursday. Welcome. Good to see you guys again after 3 weeks. This is the longest we've gone in over 2 years of not seeing each other. So crazy. How is everyone's goal planning? Good? Some good. Okay. If you're not nodding your head, your team leader probably needs to like figure out what happened because you were not happy. Go into chat and share your favorite part of your team's goal planning. Favorite part of team goal planning for you guys. What was happening that you guys actually liked from goal planning? Nobody liked anything. Oh, okay. All right. Daniel Weiser liked some wealth building panels. Cool. It looks like everybody else had a horrible time. Lots of participation, growth over the years. I love growth over the years. Awesome. All right. We're going to use that. And so we're going to use it for next year to see like, what is it that you guys really loved? This morning, we have a special guest, as you guys know. I'm going to introduce her here in a second, but first, let's start with our foundation, with our gratitude, with our values, shout outs. What teammates do you guys want to shout out for values of grit and results and only leaders and wealth and teamwork, humility? Or what gratitude do you have to share for anyone on the call? Just find the little raise your hand button and click it, and I will give you the floor to brag on someone. I see Jaime, your hand. Yes, sir.
Yeah, I want to brag on Maurice DeRay on our team. He is just with grit. You know, he was on a task to find some open houses this weekend, and he found 2. And he called me this morning and he said, "Hey, I got my circle prospecting list and it's 1,500. So I'm gonna do my $1,000 a day." So like he's in a zone right now, and I'm just so proud of him and everything that he's doing. So Maurice, let's get those $1,000 a day and let's get it.
I love that. Awesome. Good job, bud. Anybody else? Anything else to brag on for someone, or any shout outs, any values? Daniel Weiser, yes, sir.
Yeah, I just wanted to, I was super grateful for the ATX BK team's leadership after goal planning, just the amount of clarity and just the constant resources that are available to really have a good plan for next year. I mean, it was just beyond, you guys were just beyond generous, and really looking forward to a great next year.
All right. I hear that. I've got a couple shout outs. You guys are a little bit shyer. It's going to take us some time to get you guys back in with us. It's all good. Shout out Rob Lenza in San Antonio. He became a top agent. He just started last year, and he's building this strong foundation for a long-term career, right? And then I want to give a shout out, 2 shout outs for results. The San Antonio team hit 100 units closed, and the Dripping Springs team hit $1 million in GCI. This means that both of these locations have earned their right to have their own organization within place. So that's very exciting. Shout out to Brandon and Team San Antonio. Shout out to Amanda and Spencer and Team Dripping Springs. These are big, massive metrics. Congratulations. Shout out for wealth. I wrote down Alicia and Andrew in San Antonio. They paid off $30,000 in debt this year and reduced their expenses by $54,000 and then doubled their income, right? This is what it's all about. And then maybe my last shout out, Only Leaders for Maria in Austin. She's one of our top agents. You guys all pretty much know her. I want to shout her out for her promptness, right? She's had so many off-market listings that she's brought to the team recently, and as soon as a lead comes in or as soon as an agent has an inquiry on it, I mean, within minutes she is responding to those people, and I think that she makes us all look really good, our entire brand look good in the market and to the public. So want to shout out those people. And those of you who have shout outs for next week, just start thinking about them. Let's jump into Texas stats if you guys ready. Feel good? Ready? Cool.
Hey, partner.
Yeah, go ahead.
I'm risking life and limb. I did have shout outs, but today, obviously, I wanted to shout out the veterans and the veteran families on our team. Rob Lenza and his wife, Nikki's husband, and Nikki, Veronica, if she's on, and her husband, I believe Tony's dad was a Marine. Tamala was a vet. Her husband's a vet. Kaylee and her husband, he's a vet. So just happy Veterans Day, and obviously a big sense of gratitude for them and their service. And obviously being in San Antonio, we have a big affinity for veterans. So shout out to them for that.
Right on.
And if I missed anybody, I'm sorry. I'm trying not to die.
I echo that. I echo that. Amen. Amen. All right, let's jump into Texas stats. We have had 10 months of results so far. So much more fun now to see it come together than it was like January 15th when we didn't have very much to talk about, right? So let me show you what you guys have been achieving over here. So let's start at the top, right? 2020 versus 2021. And this is our changes year over year, right? So 2020, same time last year, we had 71 agents. Now we have 99 agents here in Texas. That's a 39% change. Last year, we had 134 listings, and this year we have 80 listings. So we actually have gone down in listing count. I know we're working really hard on that. 40% change year over year. Buyer reps, completely different story. 315 last year, 479 this year, up 52% in buyer reps. Pending contracts last year, just 157. This year we have 230 pending contracts. Congrats, you guys, 46% increase. Pending volume, 56 million this time last year, 101 million this year. It's an 80% increase, but I do want to show you that since last time we talked, and we talked 3 weeks ago, guys, so it wasn't that long ago, we're actually 10 million lower than where we were 3 weeks ago. So I would encourage, that holiday spirit is really beautiful, and we want to stay focused if we want to have a nice January and nice February, right? Closed units this time last year, 762. This year, 1,117 closed units. It is a new record for us. We are up 47% from last year. Closed volume from 226 last year to $409 million this year. I think we're going to actually hit 500 million this year. We're up 81%. It's just crazy. Our average close price is 366 right now. GCI is gross commission income. Last year at this time, we're at 6.1 million. Together this year, we are at 11.4 million. That's an 87% increase in money. Our average commission rate, here's a really great number, 2.78%, 2.78%. So to have this level of business with an average commission rate of 2.78%, that's a very skilled organization. You guys have definitely been working on skilling up. And the last one, we saved the best for last, agent income, right? 3.05 million last year at the exact same time. This year, our agents have put into their bank accounts here in Texas, these 99 agents, not me, not Sarissa, not Jordan, not Laura. These are the agents. 99 agents put $5.7 million into their bank accounts, up 87% in income. That's just $500,000 in the last 3 weeks, you guys. So you guys are on a nice upward trend, 2.65 million more than last year. So big shout out to you guys on that. Wanted to make sure you guys knew what a great job you guys were doing. And when I look at all that, here's why it matters. Write these 2 reasons down. Data matters. Number 1, to celebrate, right? You want to celebrate what a force we are in Texas. No one is closing more than Place is going to close this year in Texas. So you guys, that's really, really awesome. High five. Number 2, reviewing our Texas data allows us to see how we're doing as a group, because 99% of the time, guess what's happening? How we're doing as a group is likely how we're also doing as individuals. Because what is a group? A team of individuals, right? And so when we look at the data and decide, wow, man, you know what? If the team needs to level up on listings, I probably need to level up on listings. Or interesting, we're trending lower in pending volume. I'm going to look at my business to see how I'm doing personally. So it's good. It's really good. Good job, guys. It's going to be awesome to end the year on such a big number. 500 million, is that like $500 million? Is my math right?
Yes.
It's insane, you guys. Come on. I mean, we were like little nobodies like 2 years ago. Great job. Great job. I love it. Today is Veterans Day. I really like this day. I'm an immigrant, so I have a huge appreciation for people who came before me and created what I get to live out every day. It's not a holiday kind of like, sometimes there's like really happy holidays like Valentine's Day or New Year's Day. And Veterans Day is actually just a day of appreciation, I think. We remember and appreciate the folks who just served our country, right? And their families who served our country. So most of us know a veteran. Some of us are in veteran families. So we thank you for serving. And I echo Brandon and everything he said. You guys are the reason that we get to live the American dream. It's as simple as that, right? In wartime and in peacetime, it takes people who really care about us and our country to keep us safe. This week, we have Chasity from El Paso joining us as a guest speaker. Who knows Chasity? Anybody know Chasity? Oh, there's a couple. Okay.
I know Chas.
There we go. There's a couple people who know Chas. She is, I'm going to give you I know a lot of you guys take notes. She is one of the country's top realtors serving the veteran community. She's going to lead us through leveling up working with veterans, right? She's going to walk us through the 5 myths of working with VA loans and answer questions for us. So what I want you to do is be sure to hit the chat box every time something doesn't make sense to you, if you have a question, or even raise your hand, whatever you're comfortable with, and I'm happy to call on you. Our goal today is to become better acquainted with the veteran community and how to serve them. And number 2, how to handle offers as a listing agent when they come in on your listings and they are VA loans. So Chasity and her team have closed $42 million so far this year. They have another $6 million pending right now. That is 190 units plus 27 more pending. They are 44% sellers, 56% buyers. Chasity handles all the sellers, plus she's handled 47 buyers this year. So if you're doing the math, that is like probably like 84 or so sellers and 47 buyers. So over 130 transactions that she's handling. So one thing I really like about Chas is she is a high caliber individual. And I wanted you guys to hear from somebody really high caliber this morning. So let's get started. I'm going to find you, Chas, somewhere on my screen. If you talk for 1 second, I'll find you.
I'm right here. Hey, y'all.
There you are. Oh, I love it. I'm going to spotlight you for everybody so that everybody can see you. Oh, you look good, Chasity.
Thank you. I
Well,
lost
good
some
morning.
weight. Woo!
Yeah, you did. Yeah, you did. Look at you. That looks awesome. All right. So I'm excited about the value that you're going to bring to Texas, and you're in Texas. So even better. Chastity's in El Paso.
Yep.
Tell us about you. Just get us started.
I'm Chasity Rosales in El Paso. She said she gave you our stats. We did that with 3 agents, you all. So I just want to always give a shout out to them and how hard they work, because we're a small but mighty team. I'm too scared to grow. I don't have the nerve of Adelina to build such a big team. She's so amazing. And thank you so much, Adelina, for having me. There's my homegirl, Tracy. She came from El Paso. We worked together for many years. Love that she is on y'all's team. And then a big shout out to Brandon. We just closed a deal with your team in San Antonio this past week. One of my friends moved there. So thank you for taking care of her. And to the veterans, thank you so much for your service. Thank you to the families, because so many people don't recognize the family serve as well, right? Because you have to support the soldier to do what they do. So thank you so much for that and having me today, Adelina. We are a husband and wife team, but Jim likes to say a wife and husband team, because that's when our numbers changed when we switched roles. So I've been everything. I've been with Keller Williams 8 years, been doing this 8 years. I was Rookie of the Year. After that, they recruited me to be the team leader. I was a team leader for 2 years, turned our market center around. And then I met Ben Kinney back in 2015 at Keller Williams International and quit the team leader job. That's my ode to him and his fame with me, because I heard him talking about what he was creating, and I didn't know, when you get in this business, you don't know how big it can be. And so him and the Lance Lokins and the people, you know, at that time taught me that. And I came back and told the OP, was like, I made a mistake. But, you know, I think we all have our place in time where you make your splash and then you move on. And then so I jumped back in 6 months, closed 58 deals. The next year closed 93, then started a team. And the first year as a team with 3 agents, we closed 181. The second year was during COVID and all the agents left, and I still closed 213 homes. And then this year is our third year where we started over and I added some new agents and my son is helping me. And so we'll end the year with about 220. And the reality of that, y'all, is that's 220 homes at like 40, whatever, 8 million it was. We are having to work our butts off over here to close because our average price is like 200,000 over here. So we have to grind to get the same splash. But most of our business, as you can see, are VA loans. And so we're going to talk a lot of stuff about the loans today. I'm not a loan officer, but I know the VA loan inside and out. And I purposely did that because my motto as agents is it's our job to know. We're not just door openers. We're just not. And so I want you to think bigger than that. You are the partner, you are the advocate, you are the consultant to that buyer that you're working with or that seller that you're working with. So it's your job to know the basic stuff about loans, to be able to tell your seller or to tell your buyer, and also to educate other agents, because we know that a lot of times if we're educated minded, the other agent isn't. A lot of times they're not. They just want to jump in, get their check and roll. And so that's where deals falls apart, when we don't have the education necessary to see it through. I tell the sellers I sit with now, anybody can list your home and get an offer. But the difference comes when we're under contract. Can they get you to closing? Because can they hurdle all the things that we go through? And so most times they can't because they don't have enough experience, and everybody's getting licensed. Interesting stat that I learned last week is there is the same, what is it, Jim? There's the same amount of people in school right now getting their real estate license that we have all in our licensed. Imagine. Everybody's running to real estate. Who knew that everybody was going to run to real estate during a pandemic, a commission-based job? That's just the craziest thing in my head. I can't wrap my head around it. But I know you all sent me 4 questions. We're going to talk about those 4. I'm going to expound on them. If when I'm talking something pops up, do put it in the chat and Adelina will ask for you and then we'll expound on it. And then I'll give you a little bit more information. And then we're going to break it down based on the listing agent and the buyer agent, right? Because you have 2 different jobs, but you both need the same data to make it work. I'm going to give you some interesting stats because what are the myths out there? Oh, VA loans take longer to close. They're not as good as buyers. Like their buyer profile is not as good as conventional. They don't have the same amount of money. The seller has to pay some of the closing costs. It's not a choice. The seller has to make repairs. It's not a choice. Everybody can agree those are some of the common objections you're hearing and trying to get these VA loans accepted. Okay, I'm going to help you bust those right out the water and rock that agent's world on the other line that doesn't know the things that you're going to know today. And I take great pleasure in calling the agent and educating them on this. And then I send them my little video I did. I was like, hey, when you get a minute, watch this. I think it'll really benefit your business. Your first question was, and I'll talk about the stats with it. What are the best practices around appraisal waivers with loans? Shake your head left or no, because I can see most of you. Can the VA buyer waive appraisals? Yeah, everybody's shaking their head no, right? Well, it's yes and no. So they can't totally waive the appraisal, but they can offer money over and they can guarantee the difference. So let's say you have a $300,000 house. It gets up to $350,000 and they guarantee the $50,000. They can do that. How we handle that is on the third party. So on the first page of the third party is going to be $350,000 because that's what they're trying to finance. On the second page of the third party, you're going to have $300,000 where the appraisal goes, because that's what they can finance, because that may be what they qualified for, right? But then they have $50,000 that they've saved, or they have it in their TSP, which is the Army's or the military's version of 401k. And they can take that out and they can use it. So it is a yes and no answer. So just like anything else, if you have a military family that is offering to pay the gap in appraisal, make sure that you confirm that they have the funds. A good lender will confirm that for you, but as we know, those are not all created equally either. And Eileen, I'm going to give you the information of Jason Steyer. He's top 24 VA lenders in the country who would love to do a class on you for just loans and break some of those other myths and get a little bit deeper for you. And I'll give that so you can do a class for you all. So any other questions on appraisals?
I've got, well, let me see. Would you still waive the appraisal? Would you still use the appraisal waiver, Chaz, or no? Tracy?
You don't need an appraisal waiver on a VA loan because that's what a third party is for. So you don't need to use that other addendum.
Okay, copy that. And
Yeah.
then Sarissa asked a question. She got it this morning. She said, if they are truly putting zero down, how much are closing costs approximately for a VA buyer?
Well, y'all's market will be a little bit different than ours because your property tax is different, right? So we all know closing costs consist of your prepaid property tax. So closing costs look different at the end of the year. Did everybody know that it's more expensive to buy a house at the end of the year and to sell a house at the end of the year than it is at the beginning and the middle, right? Because of prepaid taxes, because they take year to date. And then at the end of the year, they actually take more taxes on the closing cost side than they do like mid-year or earlier in the year. So that'll be a good thing for Jason to explain to you so you know, because where we are in the year matters to closing cost. So in El Paso, I tell them to account for 4% of the total sales price. So whatever it is, if it appraises for 300 or 350, sorry, my dog has got a toy, hold on. Thank you. Whether it appraises for 300 or 350, whatever the appraised value is what it's going to be based off of. And so for our market, because our property tax is about 3.1% here, we got to account for more. And so then your other closing costs, right, is title policy survey, which buyers are paying here. And I suspect they're paying there because you have a crazy market too. And so you got to account for that. And then the other thing that closing costs consist of is their prepaid insurance, which the lender takes 12 to 15 months, depending on the lender. On the closing side, they take 4 to 6 months of prepaid taxes, depending. Now, what you have to be careful of on the VA loan closing cost is lenders such as Navy Federal, Veterans United, USAA. None of those are great lenders for your buyer. I'm just going to tell you, if you ever get them, try to convert them as quickly as you can. And I know all of you have horror stories with working with all three of those companies. They have nothing to do with a VA. People think, oh, because it's Veterans United, they are attached to the VA. They are not. They use that as marketing. It was a genius name, and everybody thinks that they're attached to VA. They're not. They're just an approved lender, just like anybody else, to do a VA loan. And VA loans are actually private lenders, just like a conventional FHA, all the same. The only difference in that is that the VA loan is backed by the VA, right? Think of the VA as the big brother cosigner or the mom or dad cosigner for the veteran. They actually guarantee the loan to the lender, which makes it a safer bet for an investor, actually. So that help. So in your market, whatever common closing cost amounts are, I don't know, it might be a little bit less than 3%. And remember that more expensive the house, the less closing costs you need. So y'all may need about 2.8 over there in your price range, 2.5 to 2.8. And then the other thing is the closing cost is the title fees, right? What it costs to close, and then the lender fees. On a VA loan, they cannot charge them more than 1% origination fee. And now they've gotten smarter because people know that word. And so now they're calling it an admin fee or a transaction fee. And so whatever it is, you got to get good at reading that closing disclosure that they send to the borrower. I look at every single one. If they're not with Jason, I look at every single one and I will be like, nope, what is this? Because they'll say, oh, I'm not charging them anything. And I said, well, I just see 830, 150, 250. And then I see a credit over here for 450. What is that? And the guy got mad at me. He said, you're the nastiest agent I ever talked to. And I'm like, because I asked you a question. imagine that you know your stuff so much that you can actually poke holes in the closing disclosure for the lender for your buyer or your seller, because you know it's our job to take care of them. And I told him, I'm just asking because you lied to him, and I know you lied to him. And so just tell him you lied to him because you wanted his business, and let's just all move on and fix it. And so
Chastity, what script would you use to get them with a different lender? Let's say that they started with Veterans United. Like what would you say to them to have a transition?
Oh, I always ask her for, are you, you know, we always ask them if they've already, are you financing or paying cash financing? Great. Have you spoken to a lender? Yeah, I have a pre-qual. Awesome. What lender did you choose? Oh, Veterans United. Awesome. Thanks so much for that. Do you mind me exploring that with you and what was important about choosing Veterans United? Oh, you know, they're part of the VA. They almost always think that they're with the VA or they're giving me money back. The reality is that Veterans United only pays their appraisal. That's all they get. And you know, Veterans United does have that realtor program. So there's kind of two scripts here because sometimes they'll call you and they'll be like, oh, but my lender gave me one. Oh, so we'll talk about the stats on that and what that looks like. But I just tell them, oh, tell me about that. Okay, awesome. And then I just say, do you mind if I tell you about a different lender that could save you money because you are going to be paying your own cost? And so when you start talking money, what does everybody's ears do?
Yeah,
right?
up. Yeah.
Oh, did you know, Tracy, that Veterans United is actually one of the most expensive lenders to use with a VA loan? What? They're with the VA. I have to use them. No, you don't. They're a private lender. They just use that name. And so I talked to him around that, and I talked to him about the 1% because Jason does not charge the 1%. So it doesn't cost them anything to use him. And so I explained what that looks like. If they're buying a $300,000 house times 1%, I say that's how much extra you're paying to use Veterans United. And oh, by the way, their interest rate is higher. So not only are you paying $2,800 more over the 30-year loan, you're paying this much more. Is it still worth it to stay with Veterans United, or are you open to exploring a better option? Almost always they want to explore a better option. So I just changed. We had one of my buyer's agents had one with Veterans United, and they just kept messing up. And so I called the buyer myself, and I talked the buyer into switching his lender a week before closing. We switched him to Jason a week before closing. His interest rate went down, his closing costs went down, and we still only closed 4 days later than our original closing date. Because can you transfer a VA appraisal to a new lender? You can. You can. And while we're on that topic, does the appraisal stay with the house or with the borrower?
Borrower.
With the borrower. That's another myth of the VA. So a lot of times you'll have these listing agents saying, no, because if it doesn't appraise, we're stuck for 6 months. No, you're not. The buyer owns it. So it can be transferred anywhere. So you can change lenders at any time, even if it's already come in. If they tell you, oh, but they're giving me money. Oh, well, they're paying your appraisal. I'll pay that for you. It's too easy. Let's go. Or, you know, they gave me a realtor, and I always ask permission, right? I always come, and I learned that from Dinah Kokoska. If any of y'all are here during her coaching time, always ask them permission to explain something. Don't assume they want to hear it. And I just always explain to them again, you know, not all agents in those programs are bad agents, but most of them are, because they don't make but about 10% after they close, right? Once they pay Veterans United almost 50%, once they pay their broker, once they pay their costs, they're walking away with less than 10%. Most of us are 100%. So I asked the buyer, do you think an agent making 10% or 100% is going to work harder for you? And I just sit there and quiet. And they were like, I didn't think of that. I was like, you know, those are normally new agents because brokers are in these programs, not agents. And those brokers use those programs to recruit agents. And they're giving these new agents leads like you. And then they're trying to learn on you. If you're okay with that, then great. And then most often they're not. So if they don't have a buyer's rep, that's how we convert them away from one Veterans United and to the agent with Veterans United. Any questions around that?
I love that. I'm looking through chat, and if anybody wants to unmute, you're welcome to unmute. I've got one. Shelby asked if a veteran is 100% disabled in terms of property tax, is that something that title helps handle, or does the vet do it after?
That's a great question. That's a great question. So that's actually a lender-driven choice.
Okay.
Again, this is why lenders matter. So it's the lender's choice whether to take the taxes or not. And so if they do, if they're an entity like all these ones I mentioned will always take the property tax. Oh, and they don't work here, so they don't know. So they put all this extra money in there that makes you look like they're paying like $20,000 worth of closing costs when the reality is not. So you have to talk the buyer off the ledge because they don't know any better. Because they put all the seller's taxes on there as a cost to the buyer because they don't know until title works that out, and then they apply the credits at the end. One, two, so the lender can say, I don't care, that's your problem. So I'm going to take the taxes, which is more cost for the, borrow up front. And then you have to worry about it at the end. Title has nothing to do with it other than what the lender tells them they're taking. And so if the lender is a person that will not waive that and still takes it and puts the burden on the borrower actually has to go to the city and fight that to come off. And sometimes that takes a while. Sometimes it takes a year. So not only did we just mess with their DTI, we mess with their purchasing power, and we also mess with how strongly they can compete, right? Because if that's $10,000 extra that really doesn't need to be there, that's $10,000 they could have competed with. And so again, ask the lender. If you get a lender and you don't know, a couple of questions to ask the lender is, do you charge the 1% origination fee? If they say no, say, do you charge any admin fees or any other fees that I don't know what you call it? Because you've gotten so crafty about naming these things. And then two, if you do have 100% disabled veteran, ask them that question. Hey, they're 100%. Do you waive the taking the taxes or do you take the taxes? Jason does not. So that's why I love him again. Been working with Jason about a year now. We probably close about 100 loans with Jason. Amazing, always seamless. He's an advocate for education. He travels educating on the loan. Some of this stuff I knew before him because we'd closed so many. A lot of this he teaches me, and everything that's new he teaches me. And so you see how it makes you just a stronger agent on either side. Did that answer a question?
Yeah, that was awesome. I think we got it. One question came up in the chat that Kaylee in San Antonio had. She said, if you currently have a VA loan on your house that has a substantial amount of equity, and you want to potentially use that property as an investment property and purchase a second home, like another home, like upgrade, what would be the best option in that case? Is that allowed?
It is allowed. So that kind of goes into our second question, right? Y'all said, before we move on away from appraisals and that kind of stuff, I wanted to give you all a stat that you can use. So write this down. If not, I'll send it. If Brandon, don't write down while you're driving. Okay, I'll text you these. Let's see. For 2021 stats on appraisals, right? Because the myth is they come in lower. VAs are more conservative. I don't know that. I can't prove that. All the ones I talked to say not, but what we know is data matters. And so as a whole for 2021, VA loans on VA loan appraisals came in only 15% under, only 15% of the time were under list price or contract price. And conventional, y'all ready for this? You think it's lower or higher? Well, if the myth is right, it's lower. So we're here to bust myths. So conventional actually comes in 20% more times under. So they're leading the way in that. So there's that myth buster. Okay, so since they move around so much, how many loans can they qualify for and what are the limits? Amazing question. So the limit right now for you all and for us is, okay, so this is a two-part question. Remember a couple of years ago, some of you may have heard that the VA removed the loan limit, the Blue Water Act or something. So really and not really, that's another yes and no question. If they have never used their VA loan before, or they have and they restored their entitlement, there is no limit anymore. So if they can afford $1 million house, they can buy $1 million house. If they have used their loan and they currently still have a loan on it, then that's where the cap applies. And that cap is right now $548,250. So what that means is they can own as many houses as they want as long as they don't exceed $548,250, sorry. Could they still purchase using their VA loan? They could, but then they would have to pay a down payment, which is high and it's not worth it. Then it would be better for them to do conventional or FHA if they didn't have that restored, if they'd met it. But we have some tricks around that too that I'll talk about. The only time I like Navy Federal is when they have used up all their entitlement, because Navy Federal does have 2 loan products that are 0% down. One of them is called the Military Choice Loan. So if you get a veteran that says, I don't have enough entitlement, but I can't go FHA or VA because I need that money to pay cost or compete, then have them apply with Veterans United for the Military Choice Loan because it's 0% down. I mean, Navy Federal, what did I say? Oh, Navy Federal, sorry. And then the other good thing, here you go, for veterans families. I don't know why I'm talking about Veterans United. Navy Federal also has a conventional 0 down product. So if you get a sister of a veteran that doesn't have money to put a down payment and closing costs to compete, then have them apply. Now it is a strict loan, so they got to have an above 700 credit score. So ask that question before you get them spun up. But if they're over 700 and they're a good borrower profile, then they potentially qualify for that conventional 0 down product. So you can alleviate some of that cost for them on that side. We've done that several times to help them buy and compete here. So for the question from San Antonio, so essentially you're asking me, can they buy in the same city? And they can. The answer is yes. So it's really simple. All they got to do is, and again, right lender, everything is the right agent, the right lender. Y'all seeing a trend here? All they got to do is write a letter to the VA themselves, telling them why, explaining essentially why they need another house in the same city. And I've never seen one get denied. And so if they're doing it because they really want to upgrade or they just really milking the VA loan, that's up to them and their conscience. I just say, write me a letter. If you're having a baby, if it's too small, too big, you want to upgrade, it doesn't matter. Or you want to be closer to work, it doesn't matter the reason. It just needs to be a reason that's viable. Now, here's the thing. If you say I'm downgrading, the house can't be bigger than the one you leaving, right? Because they do check that. So if it's a square foot issue, they are going to confirm that what you're saying is true on the other end, that it's either bigger or smaller than what you got. So just make sure that the story jives all the way down the line.
Okay, and just for people like me who maybe haven't done 1,000 VA loans, what you're saying is if I'm in San Antonio and I have a $200,000 loan, I could potentially get another loan.
Yep.
Or like what, like 348, 250 essentially, because my max is that 548, 250 for most reasons.
Well, it's not dollar for dollar.
Okay.
So again, the lender will tell them. So whatever, they'll have to do another loan application and the lender will confirm what they have left. And then they will do that calculation and tell them what they have left on their entitlement.
Awesome. So Kaylee, essentially the answer is yes, go for it, girl.
Yeah.
Cool.
And you know, we use this as a way to teach them to become investors, right? Because we all know that we don't get paid a lot as military members, and our retirements, we can live on it. And in most cases with their disability, they make more than they did on active duty. But what if they owned 3 or 5 houses that they milked out of the VA loan with 0% down along the way? And remember, in El Paso for the last 8 years, we've been a buyer's market. Sellers paid everything. It costs upwards of 12% for a seller to sell in El Paso. For the last 8 years before COVID, my clients were getting $500, $1,000 rebate at close, cash back at closing from their, earnest money and whatever here. So it's just amazing. So you can talk to them about that. That's another objection if they say, I don't know if I want to buy, right? Because y'all have Futures Command there in Austin. So, and my buddy's a sergeant major over there. Great program. They're creating some cool technology over there, just so you know and case you run across somebody that tells you they're coming to Futures Command. I've heard about that place. I heard you're creating some cool technology. Bam, you just built rapport because you know what's going on over there.
I love
And
that.
then-
Brandon, your hand's been up, bud. Do you have a question?
Not a question. Well, yes, a question, Chasity, because you were moving pretty quick through that other question, but you did mention DTI and the lender that matters in terms of 100% disability. Can you just shed a little more light on why that matters? Whether or not they're going to take the taxes into their DTI calculation or not, especially in very busy, fast appreciating markets like ours here in Texas.
Well, yeah, so everybody knows debt income ratio, right? Does anybody not understand that maybe newer that we need to explain a little bit more? In a nutshell, it's they take what you make, what you pay out, do a little math that I'm not good at to say this is what you can afford based on your debt and your income. Now, VA has one of the higher thresholds allowed. Some of them can go up to like 60% DTI. Depending on the lender. I mean, they can really be as aggressive as they want on that. They just have to understand the risk. So if you already got somebody that's on the very verge of that, 58, 60% DTI with the taxes, once the taxes come off, that could go down to 40%. And now they can afford another $100,000. And I'll give you an example. I had a client here that if he paid taxes, he could afford like $230,000 house. Without the taxes, he could go up to almost 400,000. Because remember, our taxes are higher here. So on a $400,000 house here, we're paying almost like $14,000 a year in property tax. So when that comes off divided by 12, that's another little nice chunk to go toward a better house. It's better for them because they get a better house, better for you because you get more commission.
I love that. One thing that I see that I missed along the way here for a second, I'm going to go slightly back to one of the questions. We were talking about appraisals on the front end at the very beginning, and you talked about the third party, which I think everybody got, but we are, I think, at least in like the bigger markets like DFW and Austin and even San Antonio and Houston, they're like, but what about the appraisal waiver? And you said, nope, don't use it. But people are so used to receiving an appraisal, like the listing agents are so used to receiving an appraisal waiver that they almost write you off. So would you put anything in special provisions, or how would you educate that listing agent?
Per TREC, you cannot put it in special provisions. So that's not the place for it.
Okay.
I had an agent here that was adamant. Listen, everybody is not Keller Williams and get all this education like us, right? So you got to account for that. And if they are, then we're going to educate them. But it's a simple, I call and come from curiosity to the listing agent. I don't come off as a showboat that I know more, even though I know more than them. I just call and come from curiosity. If that agent tells me that's what they need because their broker told them, I'm not going to fight them. I'm going to submit it, even though I know it's wrong. It says it's wrong. When multiple offers started kicking off, because it for us in El Paso was the first time, I called the TREC legal hotline myself directly and said, what's the best way to handle this? And they said the third party, because that's what it is. The third party is the appraisal waiver or addendum, if you will, for FHA and VA. It says it right there on the second page. I even read the paragraph. Hey, the paragraph says this is where it goes. And so sometimes, a lot of times the agents want to know. And so I say, oh, I called Tracy, I called the TREC legal line, and they actually said, this is where it goes. Did your broker tell you something else? Are they requiring this? I want to know. Sometimes it's just a lack of education. Sometimes it is their broker telling them to do it. And then I'm not going to fight against that. I want to get deal one, and that extra paper does not make or break me. Just make sure the numbers match, because I had one submit a VA loan and she had a $7,000 swing from the second page of the third party to the appraisal waiver addendum. So it's just, paying attention, but I'm not going to fight it. It's not required. The only place it needs to go is on the second page of the third party. But again, I want to win the deal, so I'm not going to fight it enough it's just an extra piece of paper for me to do. It means nothing. And remember, there's a document that you have to sign from the lender on a FHA and VA, right? Which is that a mandatory clause, which is also, again, another appraisal protection thing, even though it's in the third party. So, and that's a good point, because some lenders will come back and tell you, no, it has to match. They can't waive it. No, they can. They absolutely can. You can't tell a borrower they can't pay out of pocket over. But a lot of times the lenders don't even understand, right? Because they're not in our world. So you just say, oh, yeah, Daniel, I get it. I see you. I can see the confusion. No, they're actually guaranteeing that 20,000 out of pocket, which I confirm they have the funds, which he should have already confirmed. But again, we're going to make sure we're taking care of our client. And on that note, with credit, right? So a few things with VA that you can say is even stronger, right? Not only do we appraise at our price more times than conventional, average credit score for a VA borrower is 722. Average credit score for conventional borrower is 756. Is there any, there's no difference there. No difference. And on a VA loan, actually lenders, did you all know that there's no required credit score for a VA loan? It's, again, the lender's choice, right? It's based on the lender. And most lenders go down to 580 on the VA loan, just so you know. So if you get a call and you're at 590, don't shine them off. Say, oh gosh, I got a great lender for you. Let's get you with, their interest rate will be a little bit higher, but they can buy, and a little bit higher might be 3.2% versus 2.8, still worth it for them.
Right. Let's tie a bow on this one. So Misty has, she said, why can't you put home does not have to appraise for sales price in special provisions? Can we have clarity on that?
I can't answer that. Maybe call Trek Legal Hotline and see if they can give you a better answer. They just said that's not where that data goes because there's a form for it. Remember, the only thing that goes in special provisions is actual pertinent information about the deal, not a non-realty, not anything about anything that can be answered on the contract itself cannot go in special provisions per Trek.
Got it.
And we're not attorneys, right? So you have to be careful putting stuff in special provisions that make you sound like you're changing the terms of the contract.
Got it. Awesome. If you want, we could switch gears to required repairs for VA.
Oh, one of my favorite, because always
Yeah.
the listing agent says, oh, but they got to do all these repairs. Lender, here's a fun fact. Conventional, FHA, VA have all the same requirements to fund a loan. There's nothing different from the VA than the FHA to the conventional. The only difference in that loan is termite inspection. VA requires it, the other two do not require it, but you should push your client to get it anyway. Almost lost my train of thought on that. So everybody says, but all these loan required repairs, no, they all have the same safety standards across the board. So if there's a safety issue, I don't understand why anybody would push that. If somebody's paying you $20,000 over appraised value and you got a leaking sink, does it make sense to fix it? Yeah, it kind of does. But on that, the lender required repairs are negotiable, right? The seller doesn't have to pay for lender required repairs. So when they tell you, oh, but you got all these lender required repairs, well, okay, our buyer will fix those if they come up. But also VA loan is the only one that allows you to waive the non-safety items. So if they come back with that objection, say, oh, did you actually know that you could ask to waive the non-safety required repair items on a VA loan? They don't know that you can. It's simple. The lender just sends the request up and boom, it's done. Like peeling paint, right? That's a big one on the VA that we see here because they say it could be lead paint. Well, it makes no sense to me. The house was built in 2000 and you said it could be lead paint. Well, we know that was before 78. So anyway, those are one of the things we ask to waive all the time. Or wood rot, right? That's not something that will cause the house to fall down. So again, it's just, hey, lender, is this a safety item, do you think, or do you think I could get this waived? Or buyer, you know what, you got this, that, and the other, and it's got to be done. So you got to be okay spending the money to make repairs before. And sometimes the appraiser will if you have a plan, right, some of them will check it off and let you go. So it just really depends on who you're working with to do that.
Awesome. Love that. Love that. For those people who have not done a lot of VA loans, what is entitlement? You kept saying the word entitlement, and what are the entitlement amounts?
Remember, that's that 548, 250 we talked about. That's the entitlement. That's only if they have a current VA loan. If they don't, remember, there's no limit. So that's the question. If somebody calls you and they're a VA buyer, oh, do you currently have a house on, that you've financed with a VA? If they say yes, then you know that limit applies and you need to ask a little bit more. And the lender will ask that too, because they have to, they can't miss that. The thing what you have to be careful with those other big ones. Here's another tip for you on USAA. They don't actually, they don't do the loans themselves. They're a middleman. Did anybody know that? If you didn't, USA, they all think USA is God because USA lobbies to us so much and gives us so much money for our NWR programs, but they actually don't service those loans at all. They're really just a application taker, do the work on the front end, and then they pass it off to another company that does the rest. And sometimes you'll go through 4 or 5 people because their turnover is so high, which is why another question one of you asked, does it take longer to close a VA loan? Well, it doesn't unless you choose the wrong lender. In El Paso, we have an actual appraisal shorter for VAs because appraisers, just so you know, don't do all 3 loans. They get to choose. We got some that only does conventional. We got some that only does VA. We got some that only does FHA. And so we've lost a lot of our VA appraisers here to other cities that are paying them more than what they were getting paid here. So we really only have about 4 VA appraisers in El Paso right now. So we are on the struggle bus. But we put that up front. The listing agents know it. It's nothing any of us can do. So it's not like something we're having to battle. But just know that they don't take longer. I've closed a VA loan in 10 days. I've closed them in 14 days, 24 days. It really is, again, good partnerships, right? Good title company, good lender, good agents, good agent on the other side, because our goal is to get to closing. I wanted to, another big objection that you're going to see is why on the selling side from a listing agent is the seller has to pay a certain amount of closing costs. I know you've all heard that. Fun fact, they do not. If the lender does not charge that 1% origination fee or those junk fees that they rename in something else, there are no required costs on the seller side for that borrower. So that's why it's important to ask if it's not a lender that you're accustomed to working to that does charge that. That's why it's important to call the lender yourself to ask them if they charge that. Because if they don't, then there are no required fees from the seller. The only thing that the borrower cannot pay is commission. And I know that's a big one right now. So how do we get around that? Just don't call it that, right? Because a lot of times we see people saying, oh, well, we'll pay our part of the commission. What part? There's no buyer part of the commission. But anyway, let's hurdle that. We will, I mean, that's what the $20,000 overappraised value out of pocket, right? It offsets that whole cost. We're just calling it that. So it's just about knowing the terminology and what to say. The other cool thing to know is that the VA loan is the only loan that allows the borrower to actually borrow their closing costs funds. They can go get a signature loan from a bank for those closing costs. So if they say, I got 20,000 all in, oh, well, closing costs are 15,000, so we only got 5 to compete with. Well, how do you feel about this? So just, again, we're problem solvers, right? The agent's job, a good agent has plan B, C, D, E, all the way down to Z. But you can't do that if you're not educated. So, hey, do you have a 401k? Do you have TSP? Do you have any stocks that you can leverage? Do you have another loan? Like the San Antonio agent mentioned, they had a bunch of equity. You can do a cash out on VA loans. So there's different ways for them to get money to be more competitive should they want. I would just caution you to not push a military family to pay out of pocket over if they know that's not their long-term home and they're just there for a short while, because then they're going to be stuck, right? and they'll have to keep that home maybe longer than they want in the future to be able to break even, to get out of it. So just be careful on that and come from contribution and what's best for them.
God, that's awesome. Where can they contact you, Chas? Because you have so much. When I think about an expert, this is what we all want to sound like, right?
Yeah, and you can call me if you have a question, or you say, hey, Chasity, the listing agent's telling me this, just text me. I mean, you text me, I answer my texts all the time, probably too much. Jim tells me I'm on too much. Hey, I converted 4 listing leads at 10:30 the other night. Jim's like, what are y'all doing at 10:30 at night? Because they were like, where'd you get those from? I'm like on a Facebook community page at 10:30 at night.
That's right. That's right. Okay, so we've got her cell phone number and her email in there. And then what about Jesse? How do we get in contact with Jesse, right? Is that
Oh, Jason, I'll text you. I'll send you his contact number, and then he can teach you the class that he does. I was just looking through here to make sure that, oh, another big question to ask them that changed, because that the VA loan is really not 0% down, right? They have this thing called a funding fee. So it actually gets rolled into the loan. So you have to account for that. If you need a good mortgage app so you can play with what they are approved for, I love the Fairway Mortgage app, their mortgage app. It's the best one I've found. Matter of fact, Adeline, I got to send Ben a few more tips on that, because I've been sending him screenshots of the Fairway Mortgage app for brevity. And there's one more thing on there I want to show him, because we got to account for 2 things in their mortgage when you're trying to help them see what they qualify for on the quick skinny. One is the VA funding fee. Do they have that or not? If they get paid any amount of money for a disability, they're waived. So that makes it even better for them. They can afford more, or their payment is going to be less. So the question is to ask them, hey, do you get paid for a disability? It's either yes or no. Great. If they do, that's waived. If they don't, but they have a Purple Heart, because people can have a Purple Heart and survive, that is also waived for them. So that's 2 great questions to ask them to kind of get to more of qualification process.
Dang, that's so good.
USAA no longer gives better rates on insurance. Whoever said that, people are flying out the coop for them. Geico Travelers is an amazing insurance company, if you didn't know, to actually give more coverage for less. So check out, tell them to check Geico and Travelers, because again, if you're on the cusp of DTI, you need a lower insurance, right? You need to squeeze everywhere you can. Oh, can I give y'all a tip that has nothing to do with a VA loan?
Yeah.
It just excites me, that I learned as a new agent. I don't know if you know this, but on the insurance side, since we were talking about insurance, did you know that if in the last 3 years, the seller filed a claim on their house, and the last 3 years, a buyer filed a claim on a house they owned, they now become a risk, and the buyer can't get the premium rate of insurance on that particular house they bind until one of those 3 years fall off. So you have to ask those questions, because that might put them over their DTI and you get to 28 days and can't close.
Oh, wow.
Because that just popped up.
Great. Like you said, all the problems that we get to solve, we got to have plan A, B, C, D, E, all the way down to Z constantly. And when guys, we get paid for solving problems. It's amazing.
That's it. That's all we are. Big old problem solvers.
We are big old problem solvers.
Yeah. Anything that I didn't mention that's important, or an objection that somebody's heard that we didn't attack before we close, that's really important.
Going once.
Hey, Chastity, if no one has a question, is it pretty common up there when you do get a VA loan? Or I'll ask it a different way. When you're negotiating on the buy side and the seller's pushing back, or the seller agent's pushing back, do you ever use the fact that you could use like that the VA loan gives you the Tidewater opportunity for appraisal, that VA has a reconsideration of value after the fact? Do you ever use that to kind of sway them to like let them know, hey, this is the only loan where we have 3 different chances to appraise this house?
Yeah, thank you, because I actually had that written down to talk to you. So just if you haven't had it yet, if the house doesn't appraise for your your contract price, the VA appraiser invokes what's called Tidewater. They give you 48 hours or 72 hours, I think it's 48, to then provide them comps. It's the only loan that allows you to do that. And it's not one opportunity, but two opportunities. So if you give the comps and they don't come back in your favor, the buyer can actually then take it to the actual VA processing center and fight it themselves, saying, I think it's worth it. Now, the key is the buyer's got to be on board. In this market, we've seen more of them do it. In the past, they didn't because they were like, I don't want to overpay, but now we're seeing that different. We don't have a whole lot of that. And honestly, I win, just so you all know, I win my title offers, our Tidewaters often. If you're the listing agent, you got to have a conversation with the seller that talks about appraisal, right? If you want to list high and it doesn't appraise, what are you going to do? You need to understand that contingency before they go. And if you're talking to them and you're presenting offers and they come back, because a lot of times, even if you don't say an objection about the VA loan because you know better, the seller has read it. I had one tell me recently, Chasity, I want to take the VA loan because X, Y, and Z. And I said, no, that's not right. And this is why it's not right. And so I actually push my sellers to take the VA loans here just because they're moving here and they need a house. As long as it's in the best interest of the seller, right? If the VA loan is the best offer and making them the most amount of net, I'm pushing them towards. I'm not letting them go to the other two just because it's a VA loan. But yeah, and if you need help with Tidewater, if you get one and you just don't know, they send you the grid and you just put the data in the grids, just reach out to us and we'll teach you, or Jim can teach you a class how to fill out the grid because he is our numbers guy.
Love that.
We actually do it for the listing agent on our buyer side. Jim does it for all of them because they don't know any better. And so that's how we protect them both.
I love that. Misty, your hand is up. You want to wrap us up with a question?
I do have a question because it's something that I've run into more than once with the buyer, and some of those that you mentioned, USAA and Veterans United, and some of those, I've had buyers that come to me saying they have a pre-approval for a VA loan, but in reality, what they have is they found out what they're eligible for, and they really weren't pre-approved for that max $500,000. Like there's a difference between what they're actually a loan approval and an eligibility. And I've had like 3 buyers in the not so, recently that actually were completely misinformed on what they were actually what they were qualified for a loan versus the eligibility. And that I usually take the opportunity at that point to have them have a conversation with my lender. Cause I had one literally just recently that was like looking for a $500,000 home. They had been talking to Veterans United. Well, once they spoke to one of my lenders, that wasn't the case at all. They had filed bankruptcy like in the last 12 months. I mean, there was all kinds of things. So I think, getting clarity on what they think having the eligibility for a VA loan means. Do you know what I mean? Do you run into that? How do you handle that?
Well, that's why I talked to them about that in the beginning. Remember, we had that conversation in the beginning about converting them from that. Those are some of the things I use as a way to convert them, because USAA, Veterans United are both notorious for just spitting out a pre-approval letter based on the questions they answer online. And both of those entities do not confirm their eligibility until after you're in a contract. They don't even run that data. That's how scary it is. So they don't really know if they don't even know if they have an entitlement one, because remember, reserve soldiers, if you got Reserve and National Guard soldiers, that's different. Their eligibility is different. Their timeline for how long they're served is different. If they didn't serve 180 days on active duty, or 90 days in a wartime operation, it's like a 6-year time frame before they even qualify for their VA loan. Or if you get a new officer that just got out of officer candidate school, may not qualify because they don't have enough time, because their time in school does not count. So these are all the questions that that you learn over time doing them, that when you are doing your pre-qual process with them, you start hearing buzzwords that then spark other questions. Because I always give Jason a back brief on my conversation. I said, these are the buzzwords you need to look out for when you're talking to them. And that's how we have them tight. So when we give a pre-approval letter, it's actually a pre-qual letter because he's done all of that up front. And that's another way we beat multiple offers, because I say, hey, all this data is already done. We're ready to go. And we order appraisal upon execution day 1.
Thank you.
Love that. Chastity, you're so awesome. Thank you so much for this morning.
Thank y'all again. I think I'm gonna develop a class around this to start teaching because this is the first time I've done it, but I love it.
I think that would actually be really awesome. I would love that actually.
Yeah.
We
Okay,
would,
I'll send you Jason's info so you can get him on there. He'll actually fly out and do it in person with you too if y'all want, or anywhere you want. He lives in Dallas. So those of you in Dallas, real easy, he can
Wow.
bounce over to your offices. He's with Movement Mortgage. He runs their veterans program. He's rebuilding that for them. So check that out and take my info, and anything you need, call me. And then if you want that Tidewater class, for those that are interested, we can do something on the side for that. Let us know. Jim does teach an awesome expired listing class. He taught for Lance Loken's team yesterday. If you want that, let us know. Here to help
That's
any way we
fun.
can.
I
Yeah.
love that. Well, look at you coming from so much contribution. I
Yeah.
am so appreciative of you, Chaz.
Well, I owe you that because Adelina's amazing. I've been on her coattail since she started that team in Dallas. When I was a team leader, it's been so amazing to watch you build that. I'm so proud of you and all of you all that's helping her build such an amazing thing in Texas.
I love that. I love that. Everyone, we will see you next week. It's actually going to be the last Texas Power Up of the month. I don't even know how the time has flown by. But next week, we are going to focus on holiday excuses and just arming you guys up with scripts and dialogues to elevate your connections over the holidays and moving people forward. Okay. So we will see you next time. Thank you guys. See you later. Bye.
Thank you for your service.
Thank you.